Oh no, another video about GameStop. Well, before you go and click away, I want to tell you that this is not your normal GameStop video, all right? If you want the right-wing opinion, go watch the Ben Shapiro talking about the big Wall Street con job that's happening. If you want the left-wing opinion, go watch Trevor Noah in a bathtub explaining the GameStop situation. If you want more of like the mainstream media opinion, go watch MSNBC or someone talk about this. I want to give you the entrepreneur's opinion and the opinion of somebody who's up 65% as of end of year 2020. That's locked in gains. I don't talk about this a lot on the channel. I do talk about stocks a lot on Twitter, but I want to give you the opinion of somebody that's been following Wall Street bets for a year now. And I want to talk about what's going to happen. Is there a civil war coming? Is this the end of the economy as we know it? Stick around. Let me share with you what I've been thinking. This video is brought to you by Email 10K. Learn how to book meetings with billion-dollar brands and take your company to the next level at email10k.com. First, let's talk about what happened with GameStop. And you've all heard it a million times. Wall Street Bets identified it was a short squeeze. So basically, Wall Street had sold over 100% of the shares of GameStop short. So some people were betting more shares than actually existed. Wall Street Bets and a few other big investors like the big short guy Michael Burry got into GameStop, and what happened was this is basically an infinite money glitch where everybody that short sold GameStop had to buy at what's called market rate, which means they have to buy at whatever price it's sold. But since more than 100% of the shares were outstanding, that means that as long as people held their GameStop shares, in theory, the price could have kept going all the way to infinity. Now, people got pissed off because Robinhood and a few other trading apps stopped trading on GameStop. And you could see political people were up in arms about it. This became like a whole Occupy Wall Street 2.0 sort of thing. And it looks like right now, as of filming, GameStop is falling down to $251. The short squeeze that they were going for has failed, thanks to Wall Street. And it looks like the bug was patched. The infinite money glitch for the stock market did not happen. Now let's talk about why that's a good thing. One, the stock market infinite money glitch. We're not supposed to be glitching the stock market, all right? The stock market is the basis of the American economy. And I know some people on Twitter say, oh, the stock market's not the economy. Well, when the president talks about the economy, he talks typically about how the stock market's doing. So if we can avoid a stock market crash, especially a stock market crash caused by nonsense, and it could be nonsense on Wall Street's side or it could be nonsense on the people's side. If we can just avoid that crash, we're good to go. Especially as someone who's invested in the stock market, I want our stocks to go up. I don't want our stocks to crash in some kind of big short style 2008 recession thing. I don't want that to happen. And you shouldn't want that to happen either, as much as you want to get your tendies on GameStop by playing the unlimited money cheat code. It's not the way the system should work. So it's actually a good thing they patched it. And a lot of people are pissed that they didn't get their unlimited money with GameStop. I don't know what to tell you. That's not really how the stock market should work, one. Two, one of my friends made big money on AMC, which I'll talk about in a second. So there were other stocks, and actually you could have made a load on GameStop by just selling early, before it crashed. So is this a Wall Street David versus Goliath? Should we all go out there and try short squeezing and buying GameStop and other hype stocks? No, and here's why. The vast majority of the time, these are scams and pump and dumps. I'll tell you a couple examples. I was big into Fubo. My little brother loves these meme stocks and he was like, you should buy Fubo. He was just in it because it sounded like Fubu and he was watching a lot of Shark Tank. He thought it was Damon John's company Fubu. Turns out it wasn't, but it did go up 40% in a couple days. So I bought some options on there and we were making money on some of the options. But then all of a sudden Fubo crashed right into the ground, and it turned out they had litigation against them because the founders of Fubo were releasing news to make the stock go up. It was a pump and dump. Now, I'm not saying AMC was a pump and dump, but big debt holders on AMC did use the price increase to pay their debt off that normally they wouldn't be able to pay off if AMC failed. The guy on Wall Street Bets that was running the whole show with GameStop ended up pocketing at least $16 million in cash by selling one of his options early. And who knows if he got more, if he got out. But that's $16 million in gains. So is this a Wall Street David versus Goliath? No, it's a Goliath versus Goliath. It's more like when Facebook has a PR campaign against Apple. Like, they're doing this right now, right? Facebook is so mad at Apple about the privacy rules because it's going to ruin Facebook ads. So now Facebook goes out and does a PR campaign where we all get on Team Facebook to fight against Apple. Is that a David versus Goliath? Because all the people are on Facebook's side. No, that is still a Goliath versus Goliath. This is big hedge funds versus other big hedge funds. Hedge funds that have shorted GameStop versus hedge funds that are trying to do a short squeeze on GameStop. There's no David here. And a lot of people have been fooled by PR on both sides to think that it's David versus Goliath. It is not. And a lot of people lost a lot of money on GameStop now. 50-60% losses. Does that mean you shouldn't play this game? I'll talk about that in a second. So why did Robinhood side with the big guy? You could see at the heat of the infinite money glitch, Robinhood stopped trading, along with all the other trading platforms. E-Trade will only allow you to buy a little bit of GameStop. So why did all of these trading platforms, all of them, TD Ameritrade, everything, why did they stop trading GameStop? Well, one, they needed to not destroy the market, but also it's because Robinhood does not actually make the trades as soon as you execute the trades. There's this whole complex process that happens that requires them to have cash on hand, et cetera, et cetera. So when a stock starts flying around like crazy, the odds that Robinhood could get shut down or just obliterated go up tremendously, and they just have to stop trading. So based on Robinhood's terms and conditions and the way that their business model actually runs, along with all of the major investing houses, they have to shut down when things go super crazy like that. And you can see trading was halted on GameStop several times before these apps had to stop. It's just people kept pushing the stock up and up. So what do all these hedge funds have in common? Well, they're all trying to make money, just like you and me. I am not against hedge funds, and I'm not against billionaires. I think we should all be trying to strive for great wealth. And I believe in investing and believing in America. So when everybody comes in and they're buying all these meme stocks like GameStop, all I'm thinking of is Warren Buffett's quote, which is, "Be greedy when others are fearful, and fearful when others are greedy." Meaning, everyone goes into GameStop. One of my favorite stocks right now, and something I'm deeply invested in, is beautiful American company Walmart. And so when Walmart drops because everyone's investing in GameStop, as it did, Walmart went down to 140 from 144 on Thursday, and actually 147 on Tuesday, January 26th. I see this as a buying opportunity. I'm thinking Walmart's 140. All of the Wall Street estimators 2 weeks ago thought Walmart was going to 163. So this is a great buying opportunity for Walmart. This isn't a time to sell all my shares and buy GameStop. No. So I'm holding on Walmart, and I'm holding on Zynga, and SiriusXM actually did get hit with the same hype wave. All of these stocks shot up. So I did end up making a big potential profit on Sirius. I decided to keep holding my SiriusXM options instead of selling them. But at one point, the options for Sirius were up 80-90%, and I did hold those. But they're in the money now, whatever that means. Whatever that means. So what happens if normal people start gambling on the stock market instead of investing? Is this going to destroy the stock market as we know it? No, because the stock market's always been gambling, and the value stocks aren't changing. Walmart went down a little bit. Walmart is still the biggest retailer in America, and so their stock's going to go up. It's going to rebound. And if it doesn't, I don't really care. I'm not investing more than I can afford to lose. Our index funds all went down a couple percent. I'm very heavily invested in the index. I think 90% of my holdings are in the index. And so should I be freaked out when it drops 2% in a day? No, in fact, I want to put more money in because I know it's going to bounce right back. So my investing theory is very similar to Warren Buffett's, which is invest in America, believe America's going to win, because if it doesn't win, none of this investing stuff matters anyway, and be optimistic when everyone is pessimistic, and be pessimistic when everyone is optimistic. Go the opposite. If you think GME is going to the moon, you should be one of the people short selling because you know it's going to crash. If you think GME is going to crash, you should be one of the people buying massive out of the money options because it's going to fly. Do the opposite of what you think is going to happen, and typically that works out. So what might happen if this bubble bursts badly? One, I don't think the bubble's going to burst because, and this might come back to haunt me, but I think we're in a hyperinflation period, similar to what Ray Dalio was saying on his Reddit AMA, where all of these Wall Street gains, you can see typically the stock market went up, it actually went up a lot, but all of these stocks like Walmart and all these stocks went up about 20 to 30%. And Ray Dalio, who is hedge fund investor, like billionaire type of guy, was saying it's because of hyperinflation. So we've printed 25 to 30% more money, so of course the prices are going to go up 25 to 30%, even in a decline. So I still think this is the crash. We're in the crash, the stocks are just higher because of hyperinflation. But let's say I'm wrong, if the bubble bursts badly and falls like it did in early 2020, I'm going to take all the cash I have and start throwing it at the stock market because I know it's going to rebound. And if it doesn't rebound, if all of our dollars fall apart, guess what? We got much bigger problems than not getting gains in the stock market. If the US dollar falls apart, it's over. We're gonna do something else. I don't even know what would replace it, which is terrifying. So I'm betting like the dollar is gonna be around. It's not gonna be gold. It's not gonna be Bitcoin. So there is actually nowhere to go. We have to use the dollar. And so I think even in a hyperinflation scenario, it makes sense to hold stocks. Definitely doesn't make sense to hold cash. Was it just GameStop that saw this much activity in the last few days? No, it wasn't just GameStop. A lot of people were in AMC. I was trading in BlackBerry. I ended up losing about $7. I put $160 into BlackBerry and it shot up and then just shot down. Shot up 40%, then fell all the way down. And I had a stop loss order, which means I sold. I was supposed to sell before it was a loss, but I ended up selling a little bit after. And so I lost $7, but I could have made, what, 80, 90 bucks? Some people, like one of my friends, Ryan, invested in AMC and ended up pulling 6 figures out of it. But that was because he invested before this whole thing happened. He thought AMC was going to go up for different reasons because it was too big to fail. So the people that got lucky and made the real money were following these hype stocks for much longer than anyone else. I know people that were recommending BlackBerry from 2019, from 2018 that ended up making money that day. Or AMC from November when it looked like it was going to fail. Those are the people that are making money. It's not the people that are buying AMC or GameStop when it's flying through the roof. You might make a little bit of money there, but you're much more likely to lose money and stay in too long and not understand what's happening if you buy once the hype already starts. You want to buy before the hype starts. That's why I try to identify stocks that are pre-hype. Stocks like Walmart, which is going to be the next Amazon in the next 8 months. Everyone's going to see it. I'm either going to be right or wrong. I love predicting the future because I'm either going to be right or wrong, but right now you don't know. I think Walmart's going to the moon. I think Walmart's going to be $220 by the end of the year, by the end of 2021. And normally I'd say like, or I'm going to eat my hat, but guess what? I don't wear a hat. Whatever, I put my money on the line there thinking that. So that's enough for you. That should be enough for you. And I don't recommend, this is not investment advice, by the way. Don't invest in Walmart, just don't talk about it right now. Is this going to be the era of retail investors in pajamas? I don't think so. I do think that information's traveling faster than ever. So if hedge funds and other investors don't start hiring these young kids, it's going to be an issue for them because people on Wall Street Bets are making massive gains. People in Discord communities are making massive gains, but it's not any different than what these investors were doing in their Bloomberg terminal chats. The billionaires have had instant access to information for this entire time, and they've been able to manipulate the market this entire time. Now, retail investors are able to manipulate the market the same way. So yeah, I think there's gonna be more meme stocks in the future. Should you invest based on meme stocks? If you like the company, I would try, and my investing thesis has now been, 1, we're going to hyperinflation, so all stocks are probably gonna go up. 2, that means invest in as many options as possible instead of stocks. 3, if you like a meme stock, it's better to invest in the meme stock before it's a meme. So stocks like Gap, where Kanye has a 10-year deal, that could be a meme stock. Or Walmart, where they're rebuilding their entire thing and they could become framed as the next Amazon, that could be a meme stock. Or even, I love Zynga. Zynga is this dumb mobile app game that's up 30%. I got in when it was $7.91. Now it's pushing $11. It's bouncing between $10 and $11. And they're rumored to get acquired by Tencent, which is a Chinese conglomerate. So you want to find those meme stocks before they're memes. That is the way you beat the market here. You don't beat the market by trailing what everyone else is investing in. And actually a good way to find the stocks that are going to be meme stocks are to find the ones that have massively dropped. So for instance, earlier this year, I was in General Electric because it dropped so much. It was like $4 or $5 and I got in there. And right now, General Electric is pushing 11. It's 10.74 right this second as I'm filming this video. So you can also look for massive drops and then dig into the company to see if the company's gonna fall apart. That's the way that I recommend investing. And I guess the big question is, should I be worried about any of this? I think what we're seeing is the rise of people having enough. You saw it in Washington. You saw it now on Wall Street. You saw it in a lot of different ways that if I even talk about, I'm going to get demonetized. That's how crazy this world is right now. A business channel going to get demonetized for talking about business by saying certain keywords. It's a little crazy. I'm going to say that out loud, even though I might get demonetized for it. Should you be worried about all this? I think unless some structural changes happen in the US, we're going to be in trouble. Unless we go to war with China. I think unless World War III happens, which will be amazing for our economy, we are going to be in trouble. We need a common enemy. Honestly, I would say the right and the left, both of their common enemy right now is the US government. So we're kind of eating ourselves. And I'm still betting on America because this is the right time, right? The tumultuous time when everything's going down is actually the right time to bet on America. Because where else are you going to go? You're going to go to South Korea? You're going to go to Japan? South Africa? Like where are you going to move, right? It's got to be America. So I'm investing hard in America and I'm not worried about any of this. I do think war with China is coming. A big war like World War III. But if World War II is any indication, that's going to be actually amazing for the American economy. Bad in terms of loss of life, bad in terms of war being, bad in general, but in terms of the economy, it's going to be great. So no, I think the next 10 years, specifically like long horizon, 5 to 10 years, is going to be an amazing time to be in the stock market. One, because if you're not in the stock market and hyperinflation actually does happen, you're going to lose all your money that's in cash, right? Your $1,000 is now going to be worth 50 cents. But if it was in the stock market, your $1,000 might still be worth $1,000. But two, if there are some economic changes, if things happen and the government decides to start listening to the people, as will happen because there are major cracks forming. So if the government decides to save America, then America's going to do good. If the government decides to ignore its people and let America fall apart, then it's going to fall apart. But guess what? Then we're in a dystopian world. I don't even know where you end up after that. Because if America falls, Western Europe and all the G7 countries are based heavily on the American economy. Everything is based on America. If this is a pyramid scheme, then America is right at the top. All right? So I don't know what the world will look like if America falls apart. That's why I invest hard in America. This video is brought to you by Email 10K. So you don't have a business idea, huh? Do you want to know what the best business to start is, regardless of market conditions? Check out the free presentation at email10k.com. We have over 200 students that are crushing it using this business strategy, even during this time. So check that out, email10k.com. Thanks for watching the video. Be sure to like this vid to encourage this type of content. And leave a comment down below. Do you like this type of video? I know this was a new type for this channel. Let me know. Let's get talking. I'm trying to experiment. The team wants to find some new content types that you guys really like. So this is one of them. So let me know if you like it. So also be sure to subscribe for more content like this. And we also do similar videos about entrepreneurship. We do tutorials. We do tool reviews. There's a ton of stuff on this channel that I'm sure you'll like. So go ahead and just pop that subscribe button. Also, if you want to start your business, go to email10k.com and watch the free presentation. Thanks for watching. I'm Alex Berman.